Hey everyone, welcome back to day 24 of my journey to financial freedom through trading. Today is a red day, about $2 red. Um, Pretty unfortunate. So I took this micro pullback right here. You can see AMIX popped up. I got in this candle for the break. I got a high fill. Spreads were kind of big at this point. Um, thinking I could risk off here and get a swing all the way up. I mean, right idea, wrong time, but got in here, got stopped out right here, which was silly. I'll show you why in the video. It was silly. I sold too soon here. Um, you get pop up and a massive flush back down. So, boom, now you're looking at the 1 minute chart. You get this kind of, gosh, I don't know why that's in the way, but you get this kind of tightening wedge pattern. You can see right here. Um, right here, you kind of get this little both lag tightening wedge. It did retrace more than 50%, which, you know, had a rocky start, but we've kind of seen this on a couple stocks. I'm not sure exactly how to trade them. So it's definitely something I need to study and learn from. But, you kind of get this pullback. Nice surge up. I missed this micro pullback here. I called it out. Um, I should have taken it. I really don't know why I didn't. Boom, this candle, red, lightish volume, pulls back, starts to rally back up, get in for the break over 520, risking out the low of the pullback. 30 cents of risk, a little high. On this one, it's probably going to be an instant resolution. So get in here, get the break, and it squeezes up, scale out. So missed that trade here. This could have been another potential entry for the second micro pullback. But this could have been considered a micro pullback here. So maybe this would be the third. Not too sure. But I missed this trade. This could have been another decent trade, but it was a little overextended. Not as high quality as this one for sure. Especially in the moment. So yep, we had a couple other things pop up. Um, but before we look at that, I want to share just this document. So if you're new here, my name is Eli. I am a trader. I have been trading about since February of like this year consistently, but since about December kind of on and off. I'm not profitable yet, but I am building a system that I do think works pretty well. So if I follow it, here's my risk parameters. This is the biggest thing I'm focusing on in the month of August because last month I realized that my cents per share gains were bigger than my loss per share gains, especially on these high quality patterns with, high quality. Um, but I had constant size, which led me to be, quite unprofitable. And I only lost $10 that month, which is like not very much at all for trading, but these are my rules now. So that um it was an A quality. I would say just because the trade that I took, just because the risk was a little bit higher um in cents per share and the spread the spread was bigger. So I'd say it was an A quality. It wasn't quite A plus quality. I'd say that micro pullback was absolutely A plus quality. But yeah, this is kind of the setup I'm trading. I think this is the easiest way to learn it is through a visual. Stock pulls up, ideally on breaking news here, pops up, pulls back a little bit. You get in on this candle over candle when this kind of wave, the next wave is forming. You have a pretty tight stop and you try to ride the next wave up. And you kind of just scale out into the pops because sometimes, it can pop and then just flush all the way back down. So when you have profit, you want to scale out a little bit into it. This is my opinion. And then I don't want to hold if it closes below the 9 EMA because that's a bearish indicator. That's gonna, keep going down quite a bit. So I think these are helpful. This is how to determine the quality. A plus meets five pillars and has a nice chart pattern. Risk is low and expected value is super high. A meets five pillars. Chart pattern is good, but risk might be a little higher than optimal. EV is still high. B plus, B, C plus, anything less I'm skipping for sure. I don't think I'd want to even trade C plus, but these are the best patterns for me. So let's look at just the screenshots I took of these stocks first. So here YYGH pops up, pulls back almost all the way, starts to give a little rally up, and then at a daily resistance level right here, it just flushes all the way back down. So that one was a pretty big pop and drop. This one here, it met five pillars though, which was interesting. You can see it down here. AMIX, just a zoomed in view I took right there. It's kind of what it looked like at the time. AMIX, you see that micro pullback again. This one maybe could have been an entry. I think this was a higher quality since it broke high day. This would have been just kind of more that curl pattern. This one here, SLXN, pulls up to, I believe it was at a daily level. Daily chart's off a little bit. And then just flushes right down. Then now we get to watch film. Love watching film, especially when I make horrible trades and then I'm just kind of embarrassed. But that's part of the process. A couple stocks, not enough volume. A couple stocks were just down so much. I fine-tuned my scanner a little bit because it had like ETFs and stuff on it today, and it was just too noisy. I changed it a little bit. FCUV, this one pops a couple days ago, held the move pretty well, and kind of this was the third day continuation. Right there, ATPC popped up, and look at that brutal rejection. So be careful to stay out of stocks like this, because if you look in the 10-second, spread's still big, volume's still big, it's not really up very much. You kind of get this micro pullback forming here. If you want to take it here, I think that's a little more risky, but you could take it right there, right here for the micro pullback. But then look at how hard it rejects. So if you chase that, that's going to do quite a bit of damage to your account. Wait, there we go. Just kind of another micro pullback there, broke that level. And then now it flushes. So if you kind of chase this out, just be very careful. That's why I usually always wait for at least one red candle to close. So if I'm looking for this pattern, I always wait for this candle to close. I don't want to enter even in here, just because that's too risky for me. If I were to get in here, what's my stop? Way down here? That's just too big. The risk to reward and expected value are not there. Pulls back, so just be careful. And then it rallies back up. So we've been seeing some kind of weird moves like that where, maybe you'll have a huge drop and then just go back up. This one, look at this. Click on it, 1357, 25, like on 2,000 shares of volume. I'm not sure how this even happens, to where a stock pops up that much on such light volume. I have no idea, but this obviously is something that you're not going to want to trade. The volume's super light. The spread's $4. I don't know how that even happens. bad news though. There's good news. This one, yeah, kind of rallies back up a little bit. Kind of switch on and off it because I don't really want to trade it. And then this one, of course, up and drop. You can see MOVE, kind of held a little bit, but, I don't know how it popped up all the way there on such light volume, gave it all back, popped up again. It did, you'll see, it did respect the 290 MA quite well. So whenever it broke hard, it pulled back, and it bounced right off that level at 14 there. So it's interesting. It's not a trade I want to take, but it's interesting to kind of learn and understand market structure a little bit. So now AMI exits a scanner. Still at volume. Okay, it's up, 17% now. It pretty much meets 5 pillars. Other than volume's a little light. The daily volume. And so right there I get my entry. So I'm looking, I pressed the hotkey a bit late. There I got the entry for this break thinking it would be a micro pullback, but and look at how huge the spread was. 25 cents. Gosh, that's a big spread. That's a big spread. So, and my stop would have been right below 4. So I never really got an exit indicator. I was looking at the chart. I wasn't looking at the level 2, which is unfortunate. So ideally, if this says 399, I should get out, right? 395, whatever, for my stop. But you can see, never said 399, but she got a little pop up. So I shouldn't have gotten stopped out here. I should have held watching the level 2 a little bit more. But now it breaks. Now I would have definitely had to get out. Pulls back. So I think this is a pop and drop, right? Because gave back all the move on higher selling volume. I didn't have, the best execution there. So that's okay. I am not mad about this trade at all, or not like disappointed in myself, really, other than just the selling execution. I think it's a decent setup to take. Risk was a little bit higher. That's okay. But I am kind of upset that I didn't get back in it whenever there was opportunities that met my criteria, right? I've kind of, I don't know, I've kind of had a tendency to just like take one trade and be done, which if you're planning that in the beginning, I think is fine. But when you're not, that's just fear, and not great emotions. So yeah, I'm not positive why it sold off there. I'm guessing it was kind of this resistance here and here. But this level was from the day, so I will remove that on my ChartsWatcher. But yeah. So now it's kind of forming a 1-minute pattern, but like you see the selling volume so high right there, that's not a good sign. It already showed a lot of weakness. If you get in there, that's not a bad trade. The risk is pretty tight. But I do think the probability that trade works is kind of low. Maybe the expected value isn't terrible, but I think the probability it works is a bit low. Um, you get break that level. Okay, so now I'm watching for a micro pullback. You know, I broke that level. I'm watching for a micro pullback. Yeah, I can't get in there because there wasn't a red candle yet. So I'm waiting for a red candle to form. Okay, you can see how the candles are starting to slow down, you know? So that wave is kind of rolling a little bit. So now I'm looking for my pullback entry right over that candle. Right there, I get it. I mean, I don't in this example, but I should have. You get the squeeze up, and I would ideally scale out into the half or whole dollars, especially if they don't hold or don't break. Like you can see this 6 levels holding, so now my stop would be at 6. Because holding pretty well. See if it can break through 650. Maybe scale out some more there because there's a little weakness. See, it couldn't really break through 650 in a strong way. So you'd want to scale out some more there if you're still holding some. So that's how my process is. I scale out the half or whole dollars. Whenever I also think about what I'm risking. So ideally, I want to get 2-to-1 risk to reward on every play. Um, you know, and that mostly comes into entry, not quite as much of like sell as soon as it hits 2-to-1, because I think selling at half or whole dollars is a little bit more respected and a little bit better thinking process in the long term. But yeah. And then there's another micro pullback here that, presented a decent entry. But I didn't trade that. And then it wicks pretty hard off 7 and pulls back. So there's definitely a lot of opportunity here, and that's super exciting to see that, you know, there is still opportunity. Um, there's definitely still opportunity, and I have so much room to grow, you know. And I think there definitely is an edge to my system, you know. If you come into the market without a plan or you don't have an edge, then, you know, you can't really progress at all from there. Like I can now watch this and be like, okay, I should have taken that one. That's human error, that's my mistake. Maybe I should have taken that one there because we could see that it started to rally back up. Um, I shouldn't have sold quite as quick. I should have been watching the bid. So you kind of take pointers and can actually grow from it rather than if you just kind of jump in things without a clear system, then you're like, it's harder to figure out, what you can improve that way for sure. So I made all these documents about my strategy and execution and my trading journal I follow and all this stuff in the description if you want to check it out. I'm not profitable, but I think it's a great starting place. And I definitely will improve the documents over time, and they'll always be free. And I always want to make them um, easily accessible and easy to follow. So now we're kind of looking for a 1 minute pullback because it's kind of extended. Ideally, you kind of want the 9 EMA and VWAP to catch up with it, but it pulls back pretty hard. You can see there. Uh, and then it gives a false breakout here. So false breakouts happen. It's something to be very um, cautious about, especially if you're trading bull flags on the 1 minute. They of course happen on the 10-second also, but typically you can have tighter risk on a 10-second play with a little bit of a higher expected value, at least in my trading cases. If your stop is here, you can get a really nice rally up. I don't know, 7, you're probably risking 10, 20 cents. Say 20 cents here, 7, you get in at 520, that is $1.80. So it's a, 9 times risk to reward. That's insane, right? Um, Obviously every play is not going to do this, but with the micro pullback, I found that you can often get a little bit higher risk to reward. Um, and so if it wicks, you're not taking as huge of a loss, um, proportionate to what you're standing to gain. But on some of these plays, if you get in here, what's your first take profit? Well, probably the high day. That's probably not even going to be a 1-to-1, right? So if you get a wick and you lose, you're taking a big loss, but you didn't really even have a chance to gain very much. Is kind of how I think about it. So, of course, take any comments I say with a grain of salt, but that's my personal view of the market and stuff. So just be careful for those wicks. From my experience, I've seen them more commonly happen off of plays that are farther away from the 90 May. I don't quite have enough evidence to statistically prove that, but you can check out my trade visual slides here. I'll just show this real quick. You can check this out. I upload pretty much every trade that I even think about taking, whether I take it or not. So if we go to 1 minute plays down here, 1 minute short patterns, so you see a nice clean bull flag here, that worked well. It was near the 90 MA. You see some other nice plays here, they're near the 90 MA. Obviously this is super zoomed out. We're just gonna go through this real quick. Here you see they're closer to the 90 MA. And they work a little bit better. This one, slightly extended, but it worked. They still sometimes work. Some plays here near the 90 MA. ABCD pattern. Let's go to something that, false breakout. So here, one concerning sign is that how long it's been consolidating. But this was a pretty nasty false breakout, as you could see there. It wicks up, you get in here, think it's gonna squeeze all the way up, and then just drops. Bull flag, false break. Right here, it's hard to see because it's zoomed out. Here, look right here. So you get this here. This was even near the 90 MA, so it still sometimes happens. This one didn't hold 50% of the move. It's another warning sign. You get in here, think you're gonna get the squeeze up, and it just flushes. And those can happen really, really quickly. Here's a micro pullback false break. It's super hard to see, but this candle just slightly broke it and flushed all the way down on the 10-second chart. It's hard to see though. And then you kind of, there's a really clear 1 minute break there. Some other difficult price action. So maybe this right here could have been a potential, entry if you're trading the candle over candle. Now, you would want to look at these other topping tails and take that as a warning sign. Typically, if a stock pops up and drops, it's going to do it again. But this is an example of a false break. Maybe you get in right here looking for the squeeze up and it just sells. Here's a false breakout on the 5-minute chart. This would have been a pretty nasty drop if you got caught in this. Did I get? No, I didn't get caught in that one. But you know, right here, you get that break and get a flush out. So all that here's a good example, right? Pops up all the way back down. And look at how quickly this happened. This was 20 seconds of time. 20 seconds. That's not a long time. Um, so just be really careful. Word to the wise, I guess. I don't know. Anyways, um, back on track. NUW pops up. It popped up the other day, so I still look at it. I still mark out some levels that I want to see it break. But I know that if it pops up, it might have quite a few more sellers. Just due to the nature of people who bought a couple days ago at a high price and they want to sell once it pops up again, and they're still holding it, overnight. They probably broke their rules, but they're still holding it overnight. So careful on that. I was careful on that one. Now we see Amex. Um, you kind of get this extended pullback here. False break right there. If you were to get in here, you would have almost double bottom. This didn't quite double bottom, but this could have been maybe an entry there. You probably wouldn't quite get stopped out, but it's hard to time when it's gonna do this rally back up. So maybe you get in here, you get out a little bit scared, like I did earlier on the 10-second chart. It's very similar. It's a very similar pattern to that, except like right here pulls back and it rallies up. Very similar pattern. But you get that rally back up. We'll speed it up since we're looking at the 1-minute chart. Start to get a pullback here. I'm thinking if we get a clear 1-minute pullback and a break, so if we break this right here, this could be an entry. So I was looking at it. You can even see I moved this tool. This is just to show where a 2-to-1 is. And then you get another nasty rejection there. And we're going to watch this in real time because this happened really, really pretty quick. So, you're watching it for an entry. You have your criteria. You have your plan. So you want to get in on the candle over candle. Stop at the low of the pullback. See if you get a retest of the high days. But that's not quite a 2-to-1 risk to reward. So, is it really worth it? Maybe not. See how quick that was? That was like, 3 seconds of time from where it broke the level and then would have stopped you out. So there's that can be really tough because sometimes these moves just happen so quickly that you kind of, even if you execute it, you're gonna get slippage. Your order is gonna be, just barely too slow to get you out at the bottom. Maybe you get out all the way down here just because of the nature of how fast it went. So that's tough. It's really tough. Some of these moves are really fast. Be careful. Most times it's when they're really extended. From what I've seen, kind of more intuition. I want to, find some statistical evidence of this, but from what I've seen, they tend to be more extended, and especially if they're consolidating for longer periods of time. When they're like good breaking news stocks that I trade. So, we are still kind of watching a few things. Definitely made a good move. but it pulls back really quite far. So I don't want to trade it. Of course, it's under Whop. It's not really a good sign. Speed up a little more. So I didn't want to be tempted, so I just switched to a different chart and took a step away. Then NEWE breaks the $2 resistance level. So see it hits here. And then I see it break 2. Kind of slow to pull it up. But eventually I get there. Pull it up. You know, looking for a 10-second micro pullback here. But it breaks 2 and you just don't get the confirmation. So once I saw it break 2, I was, you know, a little hesitant. And then it just flushes. So that's why I wait for confirmation. You know, you pay a price for confirmation, but it helps you have higher accuracy and stay out of things like that. So yeah, you know, that happened. Pulls back, it's still kind of holding. The price action isn't great. The volume profile isn't too good. So I just don't trade it. And I was trying to fix my high day momentum scanners and stuff like that a little bit. You know, it gives some moves up, but nothing that's, you know, really super tradable. And then we're approaching 9:15. Sometimes we have news at 9:15. Here we had news, SLXN. See this, you get a little pop up and just a candle of death. You know, that is a huge selling candle. You have to be really careful. Because, you know, this looks good. Maybe you get in there. Nice. Can I get a squeeze up? You know, you're hopeful, and then your account's gone. And it happens really quickly. So I try to be really careful, stay out of those. Sometimes I get in them, and that's no fun. But that was difficult to watch. So at that point, you know, we're coming up to 9:30. We're seeing everything just kind of fade or drop hard, you know. So I walk away, right? I look at the chart, do some reviews, see where I can improve, but ultimately I walk away here. So that was the trading day. Yeah, that was the trading day. Wasn't a horrible day. Made a couple small errors. I missed a couple plays that I really wish I would have taken, and I want to improve my confidence to take those trades. But we're still getting better, and we still have an emphasis on improvement. So check out these resources. They'll all be in the description. Let me pull it up here. Let's see. These resources here will be in the description from here to here, or really from here to here. And then I'm working on a couple of resources right here. So check those out. I will see you guys tomorrow. Check out this video right here for more information on, you know, how I got started trading and my setup, and I'll put a lot more learning resources in there. So check that out. I will see you guys tomorrow.